Quantitative Finance is now for everybody. Welcome back to our Thunder Talk, and today we are going to cover how technological advancements, open source, and also Python has brought this tool that were reserved to the big financial institutions to the masses. Okay. Today we are going to cover how Python has made data gathering for financial instruments, for financial data easy, how price forecasting can now be done in a few lines of codes, and how portfolio optimization does not need to be meticulously manually calculated. So let's start.
So now let's talk about what quant actually is. So quant is a shorthand for quantitative finance, a field that focuses in using statistical and mathematical methods to optimize financial decisions such as trading, forecasting, and portfolio management. Quant can also be used to describe the person, someone who practices quantitative analysis. A quant is someone who developed the understanding and skills necessary to do quantitative analysis. But what skills distinguish quant as an expertise? There are several skills that quant need to master, but we can summarize them into two categories: math and programming. So, why math and programming is it, you ask? A quant should be skilled in math, as math is the basis of every quantitative analysis. As the name suggests, quant only use quantitative methods as their analysis foundation. Statistics and probability should be mastered by every quant. Advanced quant also needs to master the binomial asset pricing model and stochastic calculus. The first one is used in valuation, and the second one is used to model investor behavior and asset pricing. As math with a basic, quant use programming to implement their theory in the real world. In this sense, a quant is very similar to data scientists. Quant needs to mine data and do research to build portfolio and trading strategy. After that, they can work with developers to implement their research results on a daily basis use. The program used by a quant is varied, but the most widely used one is Python and R. Python is growing in market share because of its flexibility and its comprehensive libraries, but R is still widely used by people in this field. Other languages and tools that quant use are Java, C++, Perl, and MATLAB. So based on these skills, we can also categorize quant based on their roles. In general, quant role specialization can be divided into three categories. This is very similar to data science field. The categories are quantitative researcher, quantitative developer, and validation team. Quantitative researchers are focused on research and model definition. They are the ones who understand the math behind their products. Quantitative researcher will work with quantitative developer to implement and scale their research for daily use. The validation team will oversee all of this process and test the researchers and developers' implementation. Next, I will talk about data loading with Yahoo Finance. So as a quant, we will sometimes need to fetch data from the internet, and Yahoo Finance libraries in Python is one of the best options. As you can see, the implementation are very easy. First, you need to import your finance as EF, and then you can create stock object by using ef.ticker and apply the stock name here, like for example AAPL or Apple. And then we can just apply methods like financials or history into the stock object. As you can see here, we can fetch the data very easily in the shape of pandas data frame. Finance supports so many functions or methods, and as you can see here, it supports history, which will fetch history data. It supports actions, which will call the public action that the company use. And then it can also be used to call financials like we see before. We can also be used to fetch data of major shareholders and institutional shareholders. It can also be used to get balance sheet information from the company, its earnings, its cash flow, its sustainability reports, and recommendation from analysts. So finance is a very powerful tool that we can use to do quantitative analysis.
Okay, and then I want to talk about price forecasting, but before that I want to talk about stock market. Stock market is known for its volatility, dynamics, and non-linearity. Accurate stock price forecasting are due to several factors such as politics, global economic condition, unexpected event, performance, and etc. Financial analysts, researchers, and data scientists are continue to seek to identify stock market funds. The importance of stock market is first, the stock market helps companies to raise money. The second one, it helps to generate personal wealth. The third one is the stock market serves as an indicator of the state of the economy. The last one is this popular source of information for the people investing in companies with high potential. Stock forecasting is the most important one for investing and trading. And also, stock forecasting is the top application of machine learning. Machine learning tests stock forecasting has predict the future value of the company stock and other financial assets that on exchange. For the forecasting model, we use profit and sales model, for example. The advantage using profit is accurate and fast, fully automatic, tunable forecast, available in R on Python, and the sensational variance as well, robust outlier and missing data. Profit time series is designed by Facebook data scientists. The profit time series is a forecast method to use an addictive model to predict time series data. This model takes into account the effect of seasonal trends as well as for the holiday. Seasonal data is the best process using a time series that has a strong seasonal effect and separation of historical data. This is how to use a Prophet. First is you should install the Prophet as usual with install Prophet, and then FB Prophet import Prophet, and then we import the data. The data we use is Apple companies. And then after that we change the data, and after that we plotting the data. For the plotting, Prophet plots are the observed value of our time series is the black dot one, and the forecast value is the blue one, and the adjusted interval of our forecast, the blue shaded region. One other particularly strong feature of the Prophet is ability to retain the components of our forecast, and this helps represent how daily, weekly, and yearly patterns of time series contribute to the forecast value.
One of the questions we ask when we want to invest is, how many shares should we buy? Well, we have made a selection of stocks, for example, 10 stocks. And how should we divide our capital into these 10 stocks? Well, for example, we can buy 100 shares each, so that we have 100 shares each for each of those 10 stocks. Or we could also divide them so each stock has about an amount of about $10,000. So in total, we would spend around $100,000. Well, which one's the best? The efficient frontier, introduced by Markowitz in the 1950s, attempted to tackle this problem, and it's still one of the methods used 50 years later, which is today. Basically, we want to minimize risk for a target return. And this is the efficient frontier line, the curve that we see here. Now, I'm going to demonstrate you using Python and this library called PyPortfolioOp so that we can calculate what Markowitz introduced to us easily with a few lines of codes. Well, let's get to it. Now, we first, of course, have to install PyPortfolioOp, and this is very easily done with pip install. And then we just need to download our stocks, okay? And we used our Y-Finance library that have been introduced before, and we can do this. We can get the historical price easily. Now we can calculate what's the mean historical return. For example, we have a selection of stocks here: Apple, Disney, Gold, McDonald's, Spiders, and TLT. And okay, we've got the covariance, and now we want to calculate the covariance between each shares. Now, this is the covariance matrix. You could also use this. Now, let's get to the good stuff. We want to calculate, so how many shares? Okay, this is the weighting. So we should buy around 33% of Apple. We should not allocate our capital to Disney or GLD. We should buy around 29% of our capital to McDonald's. And okay, that's in percentage. So how many shares? And voila! 47 shares of Apple, 23 shares of McDonald's, 9 shares of Spiders, and 36 shares of TLT for a $20,000 capital. Easy, isn't it?
For the conclusion, is since the technological issues get more advanced, people are do something easy way to do financial things, such as predict the stock, predict the financial distress or index management, and also for bank technology. Financial industry, which has historically been closed off and now is open up. As you can see, for example, each company create their own search software and often pretty online. Today, to do a financial things is easy and cheaper and to create a financial model. Being a quant needs to understanding mathematical expertise and experience in programming, and also for the trading. The quant needs to predict potential market dynamics based on different factors. Using Y-Finance as a library tools that we can utilize the stock data available online. Y-Finance is helping the traders to see financial data online from many companies. It helps them to predict if the company is good for the trading or not. After that, we forecast the price stock. Price stock forecasting is important field to the study one, and also price stock forecasting in machine learning helps predict the future value of the company and other financial assets traded on exchange. One of the trading tools is time series. After doing the forecasting, we should do portfolio optimization. Portfolio optimization is a process of selecting the best portfolio from a set of all portfolios under consideration according to the specific goals. But portfolio optimization is based on modern portfolio theory, which ensure the investor one maximum return with minimal risk. Portfolio optimization can be done easily and effectively with a few lines of code using the help of some source tools such as PyPortfolio OPT. Whether you are a fundamental-minded investor who has identified a few underrated picks of an algorithm trader who has a basket of strategy, PyPortfolio OPT helps to combine data alpha search in a less efficient way. So this is the end of our book. Thank you.